We've got to talk about momentum in China's post-pandemic recovery. It's not going exactly as planned for the world's second largest economy. Deflation concerns continue to cloud China's economic backdrop after the country's annual CPI was flat in the month of June. That's the lowest print since February 2021. But are investors being too pessimistic over the uncertainty of China's economy? Jens Nordvig, founder and CEO of Exante Data, is still here with us. I saw you kind of moving around in your seat as we said, are we being too pessimistic? Are we being too pessimistic about China, or is it warranted, some of the concerns that we've seen initiate from Wall Street and the global economy and economists as they're trying to figure out, all right, what is China showing us in the data?
We're living in this world where almost every week we have to deal with some kind of rumor that there's a new stimulus coming in China. Like literally almost every week we have some kind of pop in the market, right? This week we had oil prices popping that was linked to the rumors about property market stimulus, right? And I'm not saying we're not going to have any stimulus in China. They're probably going to do something to try to ease the pain in the property market. But the issue is that we've had at least a decade of dramatic overbuilding in China. The demographics are horrible, right? The demographics in China is one of the worst trends in the whole world, right? That is very important for the housing market long term, right? So there's no easy fix. They just have too much property having been built, right? So it's very hard to stimulate their way out of that, especially since they stimulated very aggressively after the global financial crisis, right? They have a huge amount of debt in the system, right? So I don't think these old tools to revive the Chinese economy are going to have much effect at all, right? So it doesn't mean oil can't bounce for a day, right? But the trend in China is going to be problematic. And I'll just make one more point. We've been used to China being the manufacturing hub for the whole world, and it still is, obviously, and we can see the competition in all kinds of sectors. But the big change that has happened over the last 9 months is that multinational companies, right, are not investing in China in the way they used to. During that part of the COVID cycle where everybody wanted to buy a new coffee machine and so forth, multinationals were investing as much as they could in China to try to produce as much to satisfy global demand. There was around $300 billion coming in, foreign direct investment, to build that capacity. Now we're down to 100. This is a big, big swing. That $200 billion swing is investment into Mexico, Vietnam, Thailand, and so forth. People want to diversify their supply chains. That's a big, big problem for China if that support is going away.
We talked to an investor earlier in the week who had an interesting thesis on China where he talked about rather than exporting goods made in China on behalf of other brands, that we're going to enter a phase where China is exporting its own brands more into the West. We're seeing that, I guess, a little taste of that with the likes of Xi'an, or however you say that, Shine, Xi'an, whatever. But that, you know, cars, for example, will be coming into the U.S. market, et cetera. Will that be the next big growth engine for China, do you think, or will it never make up for the former push of growth?
Yeah, so the cars is a complicated thing because if you look at in the numbers, you can already see that China is taking dramatic market share from European producers, Japanese producers. They're mostly taking the market share in emerging markets, right? So if you go and travel in Latin America, you'll see, okay, it's actually mostly Chinese cars that are being sold, right? So that's already happening. Exporting Chinese cars into the US is much more complicated for tariff reasons, for regulatory reasons, and so forth. Same into Europe. So you're not going to see it as much in those two markets, but you're going to see it globally. But nevertheless, right, China has benefited tremendously from all these big multinationals concentrating their supply chains in China, and they don't want to do that anymore. So that is going to be a negative, even if China is trying to push their own products.
Really interesting.